All right. Hey, everyone, and welcome to Startup Hut's live streamed investing show, Startup Sommelier. My name is John Weinberg, co-founder and CEO of Startup Hut, and I will be your host. For those of you who tuned into our first event, welcome back. For those of you who are tuning in for the first time, welcome. If you're not familiar with Startup Hut, we organize live streamed virtual shows that attract fundraising and bring customer exposure to promising startups around the world. Together with Wefunder, we're building an online community of entrepreneurs that can leverage a network of investors, mentors, and resources. Look, we know that starting a company is hard enough. We're just here to make it a little bit easier. Before I dive into the best part of the day and get into how this is all going to work, I want to thank everyone for taking the time to join us and take part in the growth of these 5 awesome startups. Additionally, we wanted to thank our panelists for taking the time out of their busy days to join us, and the equity crowdfunding platform Wefunder for partnering with us for today's event. For those of you who do not know and aren't familiar with Wefunder, they are a crowdfunding service that connects startups with investors online and is predicated upon the idea that anyone, regardless of wealth, whether they're accredited or unaccredited, should be able to invest in a startup company, which almost fits perfectly with what we're looking to do here at Startup Hut in democratizing access to this type of community. Now, I'm pretty excited to introduce the 3 amazing people we have in our panel today. A huge welcome back to Don Ho, Senior Venture Partner at Pioneer Fund and Managing Director of a YC Class of 2018 graduate, QuantStamp. Carolina Starzak, CEO of NutriMedi and Venture Fellow at Venn Capital. And last but certainly not least, Eric Bullen, Angel Investor and LP at Mendoza Ventures. All right, people, here's how this is all going to work. Each startup has about 3-minute pitch for you to watch. After the pitch, there'll be a 10-minute Q&A where each panelist will ask a few questions, and if there's time, we'll source questions from the audience. Hopefully, the companies will impress you enough to warrant checking out their Wefunder page and earning your investment. If so, there will be a link to their Wefunder page following their pitch. All you have to do is create an account on Wefunder by entering your name, email address, and password. Then just click Invest on the individual company's page and follow the instructions. Super seamless. After all 5 startups have their chance to pitch, we'll conclude with a quick roundup where our awesome panelists will give feedback and do a quick review of the startups. Everyone out there in the audience, I encourage you to use the chat room to comment something nice, point out any observations you may have, ask some questions, but most importantly, we want you to sit back, relax, and enjoy the show. Now let's dive in and get right to it. First up, we have Greg Spillane, CEO of Fancy.com.
Hi, my name is Greg Spillane. I'm the CEO of Fancy.com. We're a social e-commerce platform for users to discover, share, and shop a curated collection of amazing products from the world's most extraordinary brands. I think it's clear to most that we are currently experiencing a major shift in consumer shopping habits. First, led by a generation of high earners between the age of 25 and 40 who have a deep appreciation for purpose-driven, high-quality goods and want to surround themselves with unique items that represent their own individualism, consumers are shying away from traditional retailers and many long-standing brands. And this is supported by the advisory firm McKinsey, who states that the top-ranked trend to shape the fashion industry over the next decade will be the rise of small emerging brands. Secondly, as brick and mortar continues to move online, we're losing the fun and therapeutic nature of window shopping with friends to discover something new. And that's really where the opportunity lies. Even though consumers want an interactive and social shopping experience and are drawn to unique inspirational brands, shopping platforms like Amazon are going in the complete opposite direction. They continue to become more transactional, do a terrible job of product discovery, and have started to become overrun by lower quality, commoditized goods. And that's why the timing for a platform like Fancy could not be better. Fancy's roots are in the social discovery of new brands and products. Since 2010, a global community of 12 million users has trusted Fancy to discover, share, and shop a curated collection of amazing products. Our socially powered recommendation engine provides consumers with a highly personalized shopping experience while providing tools to seamlessly connect friends and influencers with these amazing brands. We have a tremendous amount of traction. The Fancy app is currently one of the highest rated shopping apps in the App Store and has over 2.7 million active installs today. Fancy.com receives almost 500,000 organic users a month, and we have processed over 2 million transactions through our platform to date. We have a rich collection of celebrity users and high-profile investors like Will Smith, Francois Henry Pinault, Jim Pilata, and Jack Dorsey. We have put together a fantastic team of entrepreneurs and executives to lead this company and have experience building organizations and come from the ranks of Twitter, Airbnb, and Oakley. We're looking to raise $2.5 million in capital to support this growth and expansion. We'll be raising $1 million through Wefunder, and in a strong show of support from our board of directors, they've committed to match this on a dollar-by-dollar basis. We could not be more excited about this opportunity at Fancy, and I want to personally thank you for your consideration and your time.
Do you have any questions or feedback for Greg here?
Hey, Greg, great pitch you had. Really enjoyed it. My first question really is focused around something like your platform versus Shopify, and really how do you bridge that gap for merchants that you're trying to bring on?
Well, I mean, Shopify, at the end of the day, is a software platform that merchants are using. We partner, mostly with brands and merchants that are on the Shopify platform. Our technology actually has a really tight and seamless integration with Shopify, which makes working with us, very easy. When we think about where we sit in the marketplace, I mean, at the end of the day, Fancy is a destination. It's a place for people who are looking to discover and share, amazing products. But part of our model is, we do operate as a marketplace. So, all products are being fulfilled and come directly from the makers in most cases. And what our technology does is it integrates directly with Shopify. It syncs across all levels of inventory, product descriptions. So when we do work with brands and they come on board, there's no double entry or anything like that. And then when orders do come through the Fancy platform, we have a real-time bi-directional sync with Shopify. So our orders are fed directly into their order management system. So they're able to do fulfillment as if it was a native order, making the entire process very seamless and no data is lost in transaction. There's no real risk of an email or something happening where the order isn't fulfilled or request isn't acted upon.
Great, thanks a lot.
All right, perfect. Eric, we can go to you.
Yeah, great presentation, first of all. Can you talk a bit more about your revenue model and how much revenue you're driving right now? I've heard about transactions, users, et cetera, but how much revenue are you making today? Which I'm assuming you've got some kind of take rate since your marketplace. And then how do you see that evolving over the next few years?
Yeah, our primary revenue model right now is based on a take rate of transactions. It varies depending on product and merchant and location, but our average take rate right now is around 30% across the board on transactions. Yeah, from a revenue perspective, we continue to grow. Our growth revenue number, across the board has grown month over month, since the beginning of this year. As you can imagine, COVID has been good to online commerce in general. So we're a little bit, conservative in releasing exact numbers, but we're expecting to do close to $14 to $15 million in total sales through the platform for the end of this year.
Okay, thank you.
And over to you, Carolina.
Yeah, great. So it's fantastic that users get to kind of discover these unique brands, and be able to have a little bit of that, what we were kind of missing from the in-person experience at this point. Do you have any kind of exclusivity with these brands so that they can't be necessarily as easily found on other e-commerce platforms?
We do in some cases, and it usually comes in the form of collaborations. So a lot of times what we'll do is when we have a really good working relationship with the brand, or we're able to look at our data, we can work with the brand, and we've worked with the brands in creating exclusive products that are only for Fancy. So whether it's a specific color or a specific type or a specific sort of feature within a different product, we'll work with them. In that case, it will be an exclusive product to us. Other than that, we try not to lock down our partners and their ability to sell products in other ways, but that's typically how those exclusive relationships work.
Great.
Yeah.
And I actually have one question that I believe it's not in the chat, but was asked via text message to me. So just curious, and I don't know if this was touched upon yet, but can you talk a little bit more about some of the competitors in the e-commerce space and how you're thinking about separating Fancy.com from those competitors?
Yeah, no, we're really actually so excited about just where we sit in the market, right? And I touched upon a little bit upon this, but the core of Fancy and the roots of Fancy have always sat in social and social discovery and serendipitous discovery and sort of a fun, engaging, discovery platform for people who just want to interact and high, lifestyle imagery and really engaging content. And what we've done is we've morphed and we've professionalized into a very solid world-class shopping experience. And then, kind of the third leg of that stool is the fact that we're working with these unique and interesting purpose-driven brands. And when we look at the competitive landscape, we see certain people doing things pretty well, right? I mean, you got like Pinterest, which is great for discovery and inspiration, but the shopping experience is almost non-existent. They don't even pretend to do it well. Instagram, which has tried to move into shopping, if you've ever actually purchased anything, there's actually been a lot of negative fallback on it. There's no vetting process involved. Really, anybody can sell on Instagram. If a transaction doesn't go well, there's nobody really to go back to. It's not like Instagram is going to stand up for the different merchants. And then when you think of like the Amazons of the world, where they do have this very unified shopping experience, we've really moved into this world of highly commoditized products. And it's not really about brands that resonate with people. It's more of, let me give you, 100 different options of a similar product that was probably made in the same factory somewhere, and you kind of just go on an arbitrage model in pricing. So where Fancy sees ourselves is really in this gray space that sits in the middle of it, where we're this social inspirational shopping platform, but we've built a very unified and controlled shopping experience around it. So we think that there's a lot of similarities between like an Etsy of the world, but an Etsy is really an uncontrolled marketplace, and the level of quality you're going to get from one merchant to the other is very different. And although our experience feels very social and interactive like Instagram, you're going to have a much better, you're going to feel much more secure knowing that every single product, every merchant that's on our platform has been curated and vetted beforehand.
Okay, great. Any follow-ups from any of the panelists, Don, Eric, Carolina, before we move on to the next startup company?
Yeah, maybe just one question. How much have you raised so far?
Yeah, no, it's a great question. So it's a little bit of a nuanced answer because, the company, Fancy was founded in 2010. It's been around for a while time. It actually raised in an early iteration over $100 million investment capital. And that capital was invested in building an amazing technology platform that exists, acquiring over 12 million users. We have 2.5 million active installs of the app, et cetera, et cetera. There were some issues that happened, mostly in their ability to monetize correctly, which has been fixed. There was a recapitalization of the company at a significantly lower valuation. So since the recapitalization has occurred and the restructure has happened, we're raising on on a new model. So since that model, out of the $2.5 million note that's in place, we've raised or had committed about 1.7 million of that. I think that the reason that's really interesting to me coming in as a CEO from the outside and to a lot of investors who invested is you have a company that's valued at very much startup levels. If you think about where we're raising from a valuation perspective, and it's very accessible. But the foundation that's there that we're building upon was built upon over $100 million of investor capital that has come into the company, which really provides us with a little bit of a competitive head start.
Okay, thank you.
Great. And one question from the group here: what's the rate of organic user growth versus bought user growth at Fancy?
Yeah, right now it's like 95% organic. We're investing almost nothing in organic growth at this point. We do plan on ramping that up over the holiday season. Obviously, the holiday season's where a majority of revenue comes in the e-commerce world. But it's been fantastic actually. We with the fancy.com domain name and our search engine authority, we have a tremendous amount of organic traffic that ends up on Fancy for different products. Because of our install base, we have users that are constantly accessing and opening up the Fancy app. And much of what we've been doing, it's really been part of our strategy, it's purposeful, has been improving the experience to maximize conversions of the organic traffic we have, which we have been doing with just user experience tweaks, adding new products, being more competitive on pricing, better email outreach, personalization, those types of things. So that's been really positive for us. We've been able to grow, almost purely organic, and we expect to be a big part of our strategy moving forward. Although we do expect to start to invest more in paid growth in the coming months.
Okay, perfect. Don, Carolina, any additional follow-ups?
I don't want to go overtime too much, but would love to, figure out what your distribution strategy is, and perhaps, is there a strategy with creators as curators, right? I do think that there is this ownership economy and creator economy coming, and I would love to see more of that as Fancy continues to grow. Yeah,
absolutely. I couldn't agree with you more. That is a big part of who we're at. We look at it and our evolution from being product focused to more creator focused, more brand focused. The people behind the brands, we're finding that our users are much more interested in going beyond just sort of the commoditized product aspect of things, and are really looking for things in their life that have purpose and align with their own values. And so much of that comes from that maker side of it versus purely the product side. So thank you for that, and absolutely open to having further conversations there.
Yeah, and I just wanted to add a little bit. Can you talk a little bit about the vetting process for these brands?
Yeah, I mean, we have a team of people whose role is to do that. I mean, we have hundreds of brands a day that apply through the fancy.com website to be part of our site. We have a checklist of different criteria that we're looking through, everything from quality of product, where the product's coming from, who built it, what's the brand story. We look very closely at what that brand's about, whether there's a charitable aspect to the brand, whether they are into renewable materials or whatever it could be. And then, it becomes a little bit subjective at that point. We'll look at the aesthetics, we'll look at the images, we know our customer base, we know what product categories we're looking to fill, we'll look at how many products or brands we have in particular categories, and then we make decisions on who we feel should be on the platform and who shouldn't be.
Great, thank you.
Okay, perfect. So we're going to move on to the next startup company now. But before we do, just wanted to let everybody know. So the next page that you're going to see that pops up here is going to be a link to fancy.com's investor page on Wefunder. You'll see it there, wefunder.com/fancy. If you're interested in doing a little more due diligence, or if you're interested in just finding out a little bit more about the company itself, feel free to go onto that link. You can invest in there as well. Like I said in the beginning, a really seamless process. And a really great company also. So up next, we have Manna, and the team over there that's going to be showcasing their app. And they are going to be on now.
Hi, I'm Josh Abity, COO.
Hey, I'm Rachel Abity, CMO.
I'm Guy Greenstein, CTO, and we're the co-founders of Manna, a mobile app that empowers people to customize their recipe and cooking experiences.
I know what you're thinking, wow, another recipe app. But actually, we created Manna because there's nothing else out there that solves all your pain points in the kitchen. And our unique technology allows users to discover, collect, create, edit, organize, and share recipes. And we're entering the market right now because this app is for people who cook at home. The world is cooking at home because of COVID. From young people trying to learn to feed themselves in quarantine, to me learning to dice an onion, to parents providing for their families.
Here's the problem. Online recipes are inconsistent, full of ads, and actually getting to the recipe is a tedious task. You have to scroll through the backstory about the chef before you even find it. And once you do find the recipe, what do? Print it out and look at it while your hands are covered in chicken, or you write it down in some notes app.
Here's the other problem. You can use repository apps to organize recipes in a database, but that's really it. You can't also import recipes you found online, and you have no personalization tools. None of the power goes to the user.
With the Manna recipe scanner, you can import recipes from websites directly into the app in a universalized format. No ads, no backstory, just the recipe you're actually looking for.
Our database has 10,000 recipes and is always growing. All recipes are fully customizable once inside the app, and our cooking GPS gives you step-by-step instructions paired with the relevant ingredients, preparations, and amounts for each step. No more scrolling back and forth, no more scattered notes.
Our recipe swipe mode is like a Tinder for food. Swipe right if you like something, swipe left if it's not for you, and swipe up to add it to your personalized cookbook.
Manna is also a community platform. You can share your recipes directly in the social feed, comment, like, and engage with the Manna users. And you can click directly into recipes and save them for later.
In 18 months and for 100K, we built a cohesive brand, viable revenue structures, and turned our idea into a business and product on the App Store. We've raised over 125K on Wefunder so far and built partnerships with Nutty Bunny and Bamboozle, and have collaborations with major food influencers and celebrity chefs coming soon.
We have a dedicated user base of testers who've been with us since alpha product. Since we launched on Wefunder, we've seen a huge uptick in downloads and time spent on the app. We're planning to leverage this growth via social media, organic community building, partnership marketing, and ads.
Our CEO, David Greenstein, has over 40 years of experience scaling businesses, and Manna sits under his startup incubator called Wonder Brands. I also happen to have a passion for building communities. Before this, I led audience development at the New York Times and Vox. Not only that, our brand ID was co-built by Gray & Gustafson, our agency and equity partners.
Our lead investor has over 30 years of experience in the food industry and is spearheading grocery delivery partnerships as we develop one-click grocery shopping, our biggest revenue driver. And above all, we're a family business that lives and breathes our product day in and day out. So we're asking for investor capital to help us hire more developers and accelerate the process of taking Manna to the next level. Our top priorities are building Manna's grocery list and meal planning features.
You can download the app right now. See for yourself. Just search for Manna Cooking in the App Store.
Thanks so much for your time, everyone.
Thank
you.
Thanks.
Okay. Well, great pitch, Manna team. Love it. I cook myself, and believe it or not just like chicken and rice. So I'm definitely going to be a user of the app. So let's kick it off with some Q&A. Don, we started with you last. Let's switch it up a little bit. Carolina, if you want to take it away first, then we can move to Eric, and then Don. Reverse.
Yeah, definitely. So just like Jonathan mentioned, same issue. I cook a lot and I lose my recipes all the time. So I'll probably be using the app as well. You mentioned that you have some kind of initial users who have been with you since the beginning. If you kind of look at utilization, over the course of a week, what percentage of those users are actually logging in using the app?
Yeah, so looking at all of our data that we collect through our Google Firebase server, we get about 10% of our users are daily to bi-daily users, and 25% of our users are weekly users. So we have pretty good statistics. We get mostly users during the weekdays and not as much during the weekend. So a lot of people are cooking during the week and using our app utility-wise at that point. Does anyone else want to speak about?
Yeah, and so our user base, we actually launched the product very early. We weren't going to launch it until 6 months from now and build it out more, but when Corona happened and everybody started cooking inside, we would be remiss not to have this incredible opportunity to provide value, help you never lose your Post-its again, and also get a real one-to-one relationship of data from users to help us build out the app later. So we have about 600 users now, and we launched our product in the App Store with our Wefunder about a month ago. So it's purely organic at this point.
Thank you.
Do you want me to go, John?
Yep.
Okay. Just a question about the team, right? You mentioned your CEO, and then it's the three of you. So what are the roles that the three of you are taking?
So yeah, as I said, we're a family business. Rachel and I are siblings, and our CEO is Guy's dad. Guy and I have been best friends since we were about 14 years old. I'm COO, so I handle kind of our day-to-day business operations, reaching out for partnerships and meetings, and handling the kind of finances and documents as well.
And I'm the CMO, and my background in branding and audience development sort of sits me there. So my world right now is I developed the brand ID with our agency. I named the app. I'm responsible for all of our comms, marketing, and sort of audience development at this point. And then Josh and I work together on all of our partnerships, and I'm in charge of sort of curating our influencer partnerships and content creators.
And I'm the CTO, and the app is kind of my brainchild, and I built pretty much every line of code without outsourcing anything. I think that's a huge advantage for us because everything is built in-house. The modular design allows us to change anything whenever we like, make edits, and respond to our users' feedback much more quickly than if we had outsourced the help or needed to build future features with other help. Yeah, and that's pretty much my role. My dad serves as our CEO, David Greenstein. He was our initial investor, and he just serves as sort of a mentor for all of us and makes sure that we're on the right track. He's built a lot of very successful businesses.
Yeah, he keeps us in line.
Great. I had a quick question around the data and the intelligence you're collecting. Certainly, I think there's a lot of power behind calling this a Tinder for recipes. But what sort of applications can you use and can you draw? What sort of graphs are you creating?
Yeah, so we collect all sorts of different user data, and the beauty of it is that we don't actually have to collect it on our own end as much because all the user data is sort of being held within the database itself. For instance, their cookbook is a great way to see all of the recipes they like, and you can get an idea if the user likes Italian food or Chinese food, or even particularly mushrooms, because it gets so granular as that. Then we can also track the posts they like and the tags that they're sort of associating themselves with at that point. And that's really powerful because it allows us to target them with marketing that is and ads that are really specific to that user base, which is really unique towards all these different sorts of apps, like in the recipe publisher space. And I'll allow Rachel to talk about this a little bit.
Yeah. The thing that's unique about it is sort of there's two problems in the space, like we said in the video. One is publishers where they feed you something, but you can't tweak it and save it unless you're sort of using it something manually. And the other is repository apps. Again, no power, but organization. The thing that's special about the data is that it informs all of the micro communities we're building in the app, whether you're keto or kosher, or you like to bake, or you're allergic to something or have a sort of allergy, you can form communities with those people, and that's why the social feed is really important. So we get tons of data from the social feed, and everything connects the way Guy built it. So in swipe mode, if you swipe right, you're liking a post, and if you swipe up, you're adding to your cookbook, and if you swipe left, you're saying it's not for me. So we're learning what people like, just like Tinder. The more input you get out of it, like any good relationship, the more we get out of it too. And so we can use that data, A, to enhance the features that people are using the most, B, make sure there's more content being powered, and the content's mostly UGC, so all of the data and metadata and tags sort of build up to create user personas, behaviors, propensities. It's amazing.
And to give you a sense of the implications for the future, when we start activating our big revenue drivers, one of our main value propositions is what we call one-click grocery shopping. So the idea is that because of the way the app is designed, we're adding a meal planning feature where you can just drag and drop recipes straight from your cookbook into the meal planner, and the app will automatically parse that out into the ingredients that make up all of those meals and into a grocery list. So it can do the shopping for you, and as you use the app more regularly, it can track what you have left over from your last shop. So that's kind of like our main revenue driving plan. We have some other revenue structures, some ads in the social environments, none in the utility environments, because we really want to make sure that's like an ad-free experience for our users. That's one of the things we're trying to solve. And then some printable cookbooks and other unique value props down the road. But grocery shopping, I think, is probably our most unique value proposition and the main reason that we're trying to raise capital so that we can get to there quicker.
Great. So we have a slew of questions here from the crowd. Let me get to as many as possible. I want to be sensitive to time as well.
Sure.
Let's try to get to them. So one of them, I think, pretty straightforward. Someone is not able to download or use the app from any app stores. They don't see it on iOS. Is it on iOS or is it available everywhere?
It's called Manna Cooking on iOS.
It's exclusively for iOS right now. So one of the other things we're going to do with funding is develop an Android platform and a mobile web platform and a web platform as entry portals into the app. But yes, if you search Manna Cooking and you see something with the exact logo, that's us. And we can drop in a link at some point.
Perfect. Okay, awesome. And the other is related to your user growth. So what is the plan for long-term user growth?
Sure, it's a mix of plans. So right now we're actually building out like our incubation partnerships here. So one is we're focusing a ton on organic growth, obviously, and that comes from sort of mining on social media, partnering with local businesses and just getting influencers. So we're building out partnerships with food creators, and the whole ethos behind how we do it is value add content. So we're partnering with someone who's going to make a series for us about how to make stuff with the stuff you have in your kitchen, like juicing without a juicer. We're building partnerships with food brands, and we're going to have an e-commerce structure. We're building partnerships with other local pantries and restaurants, and creating sort of like an evangelizer database there. We're also going to be doing some paid marketing and advertising on YouTube and Pinterest and Instagram, and also just do a ton of local outreach and try and collaborate with if you think about it, like everybody cooks and everybody needs help cooking right now, and people are learning to feed themselves. So the sort of value is pretty immediate. So far partnerships have been pretty seamless in terms of like, you come on with us on Instagram or a newsletter or content takeover, and we get access to other people's lookalike audiences. And so it's been a really seamless build from there, especially because we just started. And then from there, we'll build out partnerships with different B2B organizations that will also have marketing coming in hand.
And to give you a sense of like the large scale strategic ideation, the goal is really to target micro communities at a time. Because right now the app is very much an open world environment because our user base is very intimate. But as it grows, the goal is to kind of curate your experience in the app to match whatever you're looking for. So if you are celiac and you truly cannot eat anything that has gluten in it because it's dangerous for your health, you can find other celiac people, search for recipes that are only celiac friendly. And then on the flip side, if you just love mac and cheese and you want 35 versions of it, like you can just do that. You can have a cookbook filled with mac and cheese. So that's kind of our goal, is to take existing communities from other social platforms and kind of import them into Manna.
Cool. Well, yeah, I'm all on board for a cookbook filled with mac and cheese recipes. Next question comes, actually, perfect name, Inner Taco. So that's pretty. What problem? Can you elaborate a little bit more on the problem the app is solving? Like, what separates this from other like cookbooks or like a simple Google search? And then actually, there was one more question that I think I could tie into this one is, how do you like protect yourself against a bigger recipe company just coming in and with a larger user base and duplicating this entire process?
So I'll start with protection and then I'll let them handle the other thing. The interesting thing about our space is that it's kind of divided between content publishers and utility apps, but the one common factor among them all is that they're pretty old. A lot of them were created 7-10 years ago. Many of them are from very established brands like Food Network or All Recipes, and they're built on legacy technology. A lot of the similar types of competitor apps, whether you're talking content or utility, ours is of course both, are built on legacy technology that frankly they don't have the financial incentive to switch up what they're doing. They're already successful, they're succeeding in the market, and their technology is massive, built on this legacy code. So we have this like recency advantage in the way ours is designed. Everything is built cutting edge. We have access to tools that weren't available 10 years ago that for us are only $20 a month. So even for a small business like ours, we can easily afford like top edge database software, cutting edge search software, same kind of platform that Twitch uses actually. We use Algolia.
Yeah, and I think something else is, it's not really worth companies' times to sort of invest the hundreds of thousands of dollars and months of effort to sort of figure out what Guy has done. And in that way, we're additive instead of threatening to other companies, right? Because that means eventually we could either be in partnership or acquisition, and we see the value in the technology that Guy's built and also the team. And that's a big way to protect ourselves too. And in terms of what's different, they're just not motivated either, right? Like publishers are there to sort of serve you something and you take it as it is, or you don't. And so we're different because nothing else out there takes people through life cycle of food. We're about recipe discovery, helping you while you cook, helping you buy groceries, fill your pantry, social community. It's none of the other apps out there do all of those things. And so this is really for people who cook at home and want a seamless experience.
And part of it is only possible because we set out to do all those things from the very beginning. From the very first line of code, we built an architectural database that can serve all of those different functionalities, that does understand the difference between directions, ingredients, amounts, measure words, preparation, and then can parse those out and use them however it feels necessary, whether that be in grocery list or whether that be in serving you the data that you're looking for.
Okay, great answer. So we have other questions, we have other comments as well. To be sensitive to time though, we're going to move on to the next startup company, Manna. Great job. What we're going to do is we're going to wrap up some of these questions and send them to you after with whoever sent them, and feel free to respond and we can send that out to everybody who attended today.
Great. We'd be happy to. Thank you so much.
Thanks so much, guys.
All right. Well, take care, guys. Everyone out in the audience, keep in mind their link to their Wefunder page is going to be popping up on the screen shortly, where you can go visit wefunder.com/Manna. Again, check it out. Do more due diligence if you please. And yeah, great job. So up next, see you guys. So up next, we have AJ at Vyrill. AJ, your time is now.
Hi, everyone. I'm Ajay Bam, CEO and co-founder of Vyrill.
I'm Barbara Rosario, co-founder and CTO.
Vyrill is a user-generated video content discovery, insights, licensing, and commerce platform powered by a proprietary AI technology.
Our mission is to empower brands with user-generated videos and insights to enable e-commerce and product marketing.
So with 600% growth in video consumption and creation during COVID, and 85% of consumers mentioning that videos assist touch-free shopping experiences, video has now become essential to shopping. Google and Bing do a very poor job at finding relevant videos and searching inside the video. So in a nutshell, Vyrill is a Google for video, and Vyrill helps you Google inside the video to unlock video data for revenue.
So we've trained machines to watch millions of videos, to analyze text, audio, and images, and offer in-video search. Our insight reports reveal data in 9 dimensions, from trending videos and influencers, brand safety, whether it takes place inside or outside, topics, keywords, including videos where someone mentioned your brand name.
So this helps retailers and brands leverage video reviews, unboxing videos, how-to videos, and more to stay timely and relevant. Our customers include Sargento, Revlon, Porsche, AirAsia, generating more than $300K in revenue.
This month, we completed a successful integration with Dropbox and are working on integrating with more platforms.
My background is 15 years in mobile e-commerce and marketing, and I previously built and sold a mobile shopping app company.
My background is in machine learning and natural language processing. I met Asia at UC Berkeley, where I did my PhD, and I previously worked at Intel and Technicolor.
We would love to have your support for our Wefunder campaign for $1 million. If you have more questions or comments, please do reach out to us on our Wefunder page. To learn more, please visit us at vyrill.com. Thank you.
Okay, great pitch, AJ. Thank you for that. Now we'll start off the Q&A with
pitch,
Eric.
AJ. Thank you.
Hi, can you hear me?
Yes, we can hear you. So yeah, let's start the Q&A session off. I know we went Don on the last pitch, Carolina on the pitch after that. Eric, we'll let you kick it off first.
Sure. Okay. Good presentation. Question, you mentioned the top line revenue of 300K, right? Can you talk a bit more about the underlying revenue model and how you engage with customers and then some of the unit economics as well?
Yeah, absolutely. So essentially, we are, the business model is really SaaS, and customers, and it's really tiered upon a number of videos that Vyrill analyzes for insights or promotions and more. So essentially, brands buy into a monthly or annual data plan for videos. And then in addition to insights and more, we also charge on top of that, we charge a fee for licensing as well, for licensing transactions. So there's sort of two components to the platform. One is capturing videos and insights. And the second component is leveraging videos and then distributing that content, which is licensing plus distribution. So we have split the business model into SaaS plus licensing.
Okay. Thank you.
And so, usually for bigger enterprise customers, the SaaS revenue, the ACV, generally it starts at around 40 to 50K, and it can go as high as $1 to $2 million, depending on how big the brand and the retailer is. And so, the future of video, future of commerce, in our opinion, is video. It will start and end with a video. So video is going to become a default on all product pages going forward. And so our mission at Vyrill is to really enable brands and retailers to increase revenue and find new customers by leveraging video reviews, unboxing videos, and more for insights and product marketing.
Okay.
Great. My quick question is around your sales cycle today. What does that look like? And, even post-sale, what does an integration look like with your brands?
Yeah, absolutely. So in terms of, the enterprise sales, COVID has really changed the game for us. Video consumption and creation during COVID is up 600%, and it was already growing 200% year to year. So essentially, we sell, our customer is head of e-commerce and VP of digital marketing at brands and retailers. So the good news is, when I walk into the meetings, they understand video. I don't have to explain video. Essentially, I think the big challenge for a lot of brands is today video content is being produced on 20 different platforms in 48 languages. So digging manually through all this content to find amazing reviews and unboxing videos and more, it's very challenging. In fact, it's impossible. And so that's really where Vyrill comes in. So usually our sales cycle now is between 8 to 12 weeks after we initiate the first call. And usually it starts with an audit of their video content on social media platforms. So in order for customers to really leverage and understand what they want to do with video, they want to know what's actually happening with all their content on social media platforms. So generally we do the audit. It's really quick in terms of launching a customer. We have a couple of big brands that have signed up with us. The process really is they usually will give us a list of product names or competitor names and competitor products, whatever they're interested in tracking through the platform. And they can do this on their own as well, or they can give us an Excel file. We upload the file, and literally within a couple of hours, the system will start crawling all the video content, reviews, unboxing videos, and more. And they will see the ROI within 48 hours. So it takes another 24 to 48 hours for videos to be analyzed. And then they can, after the analysis is done, they can then start leveraging all that content for campaign management and more. So with enterprise customers, I would say that it's about 8 to 12 weeks. For small SMB customers, we're actually launching shortly Try and Buy, or the freemium model is actually launching end of the month. And I think this was just general feedback after having launched this for the past 18 months. In fact, all customers, both enterprise and SMB, said, "Hey, we would love to try out your service and your product for over 14 days, and then upgrade to a paid account." So that's actually where we're heading now with our business model as well. Is we will launch Try and Buy later end of this month, and from there.
Thanks.
Right. And in terms of the data that you're collecting, who owns it? Do you sort of co-own it? Are you able to apply it, to and monetize it in any other ways?
Yeah, so a great question. So first of all, we only look at public data, and so we collect data both from social media platforms, and also we just integrated with Dropbox, so we can also collect data from your phone or from your desktop with your permission, or you as a creator can share that data with brands and retailers. So we make sure that we are GDPR compliant at all times. We're also making sure that the data that we're tracking is also public. And if something does get turned off, private, or it happens, once in a while the video is pulled off, we actually will pull off the video as well from our system. So we are absolutely GDPR compliant. Now, when it comes to leveraging videos after they have been analyzed and more, that's really where we have a licensing model, and we have actually solved this problem. So the biggest problem right now for brands and retailers is they see a great review on social media or someone will post a video. They can't really use that video without their permission. And so that's one of the key elements of our platform is we have solved the problem around acquiring licensing rights to the video through the platform. So we can do this at scale. We can do this for one video, or we can do this at scale with multiple different business models. So for example, I'll just share with you a couple of examples. So we can do PayPal Cash as a reward. We're also in talks with a number of brands and retailers to offer airline miles and points as well. Many of the big retailers have their own credit cards. So this can also be tied to offering incentives such as, so after a purchase is made, a brand or retailer could reach out to their customers to acquire a video review or unboxing video or how-to video, whatever they're interested in capturing. And they could offer in a reward for uploading a video, which could be points and credit after. So there are many business models that we can implement around acquiring lights and then distributing that content.
Great, thank you.
Thank you.
Okay, perfect. Any follow-up questions, Don, Eric?
Not from my end.
Great. Okay. So there is one question from the audience.
Sure.
In the interest of time, though, AJ, if you can give a quick answer, can you describe what you mean by see inside the video? Like what kind of data are you actually looking at?
Yeah, so that's a great question. So essentially what we do here at Vyrill is we analyze video, audio, text, and images once the video is captured. And we analyze the video in 8 dimensions. So everything from demographic and diversity inside the video. So for example, the age and gender of the person in the videos. We also track all the topics, themes. We also track brand safety as well, which is a big issue for a lot of brand customers and retailers. So we look at both from a computer vision point of view, we look at nudity, and we're also looking at foul language, violence, minors in the videos as well. We also analyze scenes as well inside the video and more. So essentially we analyze the video in 8 dimensions and topics and transcript and keywords. So essentially the goal is to help brands and retailers get a quick summary of the video so they can decide whether they want to leverage the video or not. The other thing is that we do is and so essentially we're one of the very few companies in the world that is offering in-video search. And one of the key elements of our search is that, at the end of the day, when you have 20 videos in future on a product page and the customer is looking for answers, most customers don't have time more than a minute or two to get their answers. So with Vyrill, we're building a widget where you can search inside 20 videos for what you're looking for. So let's say you're looking for a car with yellow leather seats and you just type that, we can take you inside the video where the yellow car seats are featured. So essentially we can answer your queries with in-video search with whatever you're looking for in terms of audio, text, or images inside the video. And in a nutshell, that can help you as a customer make informed purchase decisions. And that's really one of our key. We also have a patent on this that we have filed on analyzing and measuring demographic and diversity inside the video as well, and making recommendations to brands and retailers based on our analysis on what videos they need to capture from customers to maximize their revenue and audience and market.
Okay, great. Well, thank you so much, AJ, for taking part in the event. Great pitch. That was a great Q&A. Again, everybody, the link to AJ's Wefunder page is going to be coming up shortly. Wefunder.com/Vyrill. They're new on Vyrill. Check them out. Do your due diligence. And great. Thanks again, AJ. So up next,
Thank you so much for the opportunity.
Of course. So up next, we have Neighborhood Son and founder and CEO Gary Skolnick.
Hi, I'm Gary Skolnick, the CEO and founder of Neighborhood Son, and I'd like to invite you to imagine a world where everyone has access to solar power, not just a select few. At Neighborhood Son, we were founded to bring solar energy to as many customers as possible, including those who don't have a house or have a roof that faces the wrong way or has shading or can't afford the upfront payment of a solar installation. Community solar allows everyone to access a share of a local solar project, whether that share is powering your apartment, your house, your condo, or your townhouse. Welcome to the new world of solar. Our value proposition helps the solar project owners as well as the consumers. For solar project owners, we provide a platform to reach thousands of customers and to manage those customers for the 25-year lifespan of their project. For consumers, Community Solar offers a discount on their electricity while promoting local clean air and clean energy, as well as local jobs. At Neighborhood Sun, we've built a new advanced software platform called the Sun Engine. This platform utilizes the best that we've learned from the market so far and advances it to the next level. It's fully customizable. It can do all of the things that the other platforms can do. And it has the ability to white label for any community solar company that wants to use it. And of course, customers can access billing details and environmental information about their share. We've got a very strong record to date. Since we got started, we have acquired over 3,000 customers for community solar projects in Maryland. Some of our milestones are we incorporated in 2016. We closed our first seed round in September of 2018. We subscribed our 2,000th customer in September of 19. And then just recently in May of 2020, we signed our first contract in the state of New Jersey. We've added to our team, and we now have a very strong management team, including 3 people, myself, John Wilson, and Sherry Robinson, who have decades of experience in retail green energy sales and solar energy. Our board of directors includes 2 independent members, and we're very proud of the advisors we have who bring decades of industry experience. So far, we've raised funds over $700,000 in our initial seed round, $600,000 in our Series AA, and we are on Wefunder now, where we have raised over $350,000. A key investor has been the Chesapeake-based Seed Capital Fund and Galt Power. We are raising $1 million to expand our advanced software platform, enter new markets, and hire additional senior personnel. Thank you very much.
Okay, thank you very much for that pitch, Gary. That was great. Now we'll kick the Q&A session off.
Okay, thank you very much for that pitch, Gary.
All right, Don, if you want to kick us off with the Q&A.
Sure. Great pitch. Really enjoyed it. I have a quick question about your distribution and who you currently sell to. Do you sell directly to end users, or is there more of a distribution where you're selling to the actual community project? How do you think about that go-to-market?
Yeah, so Neighborhood Sun, we basically have two kinds of customers. On the one side, we have the solar project developers, the guys who build these very large solar farms. And on the other side, we have the thousands of residential and small business customers. So we've been very successful at signing up both kinds of customers, and we need both in order for us to scale and succeed.
So what's more valuable to you? Where are you bandwidth constrained?
Well, so for us, it's the pipeline we need is, or so to speak, the product is the solar project. So it's very important for us to get more solar projects in our pipeline. And the only way we're going to do that is if we successfully sign up thousands of residential customers. So one success breeds another. And we've become really the go-to company in Maryland, and now we expanded into New Jersey, and our strategy is to go into other states where community solar is available as soon as we possibly can.
Great, thank you.
Mm-hmm.
Eric or Carolina, feel free to jump in.
Yeah, maybe just a follow-up question on that. You mentioned you've been successful acquiring customers. How exactly have you gone about acquiring those customers from a sales and marketing perspective?
Sure. So it all starts with brand. We are a B Corp with the highest rating of any B Corp in the community solar space. So it's vital to create a brand that is credible and that people trust because in the energy space, there's a lot of bad actors. So starting with that credible green brand, we then go out to we have a different variety of ways of getting customers. Our two primary ways are channel partners like faith organizations, NGOs, environmental advocacy groups. And those groups won't partner with a company like us unless they know that we really walk the walk. And secondly, we have a large referral base. So once our customers are signed up with us, customer happiness is one of our top brand values. And when we succeed in engaging our customers and bringing them up on that ladder of engagement, we're able to get a significant number of referrals through our customers. So it's really important for folks to know we're a mission-oriented company. We're out there to fight climate change and to support local communities, and we do that through community solar. So it's really a powerful kind of movement we're building that is within our brand.
Yeah, and to follow up on Eric's question, what is kind of price of entry for an average customer?
Well, that's the great thing. I mean, I've been in the clean energy business for 20 years, and I could tell you that this is the best kind of product that is out there. With community solar, there's no upfront payment. We're not talking about installing panels on your roof. And you save money from day one. So for a residential customer, when they sign up, they get a savings anywhere from 5 to up to 25% on their electricity, and it's a guaranteed savings. The other value that this brings to them is that it's local power. So it's not just fighting climate change, which is a global issue. It's also helping to clean up your local air pollution.
Yeah, but so what would be, I guess, in terms of the pricing, is that set by your partners, or are you able to kind of, price it per kilowatt and potentially have like competitive pricing?
Well, the pricing is set with the solar developers and us, but they rely on us to give them the market feedback. So when we first started 3 years ago, we had some solar developers who wanted us to do some not such great pricing, and the market very quickly said that doesn't work. So we have a very good idea of what is needed in the market to work. And the benefit of working with a company like Neighborhood Sun is that also because of the brand and the customer engagement, they have a very low attrition rate. So they don't have to worry as a solar developer that if we're offering a 10% discount and somebody comes along and offers a 12% discount, all of a sudden we're going to lose our customers. We know that our customers will stay with us even if there are potentially better offers out there down the road.
Great, thank you. And when do you think you'll be national? It sounds like you're in like 3 states now.
Well, yeah, we're in the Mid-Atlantic for now. We're doing this raise on Wefunder, and we're very happy that we've raised well over $400,000. Neighborhood Sun is planning to be a national player, I would say, towards the end of next year. It depends on how our ongoing financial raises go. You need the resources in order to get out there. And with our first initial raises, we've raised almost $2 million to date. And with those raises, we've been able to hire a senior management team now. So I've got a CTO who built an advanced software platform for us to connect the projects with the residential users. And I've got a director of sales who has 20 years of experience in the energy sales sector. And she has just joined us about a month ago.
Great, thank you.
Yep.
I had a follow-up question. Is there ever a point where you could potentially license the software that connects these grids, and perhaps be a provider to many different Neighborhood Sun pop-ups across the world?
That's a great point, Don, and absolutely that's what we're trying to do. So one of the reasons we built our advanced software platform, which we call Sun Engine, is that to get to a scale, we realize that we can't be doing all the acquisition and management ourselves. We want to have a platform that can be white labeled and can be utilized by any community solar company anywhere. So we really built it. It's fully customizable, and it's capable of supporting many different companies all at one time.
Okay, great. If there aren't any additional questions from the panelists, Gary, amazing pitch. I know climate change is a huge topic of discussion right now, just around the world in general. I know a lot of companies that are trying to get into that space as well. So great job, great Q&A session. Again, everybody out there, visit wefunder.com/neighborhoodsun if you'd like to check out the company in a little more detail and see any of the other additional information that they have on that site. Now, we are going to move on to, last but not least, our final company, which is Regrained, and CEO Daniel.
Hi, my name is Dan Kurzrock, and I'm the co-founder and CEO of Regrained, a food technology company and ingredient platform helping to lead the upcycled food revolution. Our mission is to help the world do more with less and to improve the health of people and planet. By upcycling, we can all do our part to reduce waste, eliminate food insecurity, and conserve our limited resources. At Regrained, we identify healthy food that is overlooked in the production process and rescue it in line using our patented technology to create delicious, versatile, better-for-you ingredients and our own branded products. It all started with a vision to recover the billions of pounds of grain generated by breweries. Through R&D, though, we discovered that our patented tech can also be used to rescue other food, including pressings from juice, the oats and almonds left over from milking, and more. As an ingredient and development partner, we upcycle at scale by actively collaborating with many of the brands you know and love. We would list them, but attorneys insist on strict NDAs while in development. Suffice it to say that soon many of your favorite products will be powered by Regrained and available wherever you shop. Picture everything from global snack foods to fast casual restaurant chains to major retailer private label programs. Our branded portfolio includes our recently released and highly successful snack puffs and our OG bars. These products help us to develop the market for upcycled food and to capture tons of market data to inform our strategic development pipeline. They also generate near-term cash, which helps us to manage the long sales cycles that our ingredient partnerships require. As humans, we have to eat to survive, but exactly what and how is up to us. More than 40% of food grown each year goes to waste, and with it also the water, energy, labor, and nutritional value. We can do better, and putting delicious, nutritious food to its best use, feeding people, is our part of the solution. The Regrained platform uniquely creates new foods from crops that have already been cultivated, harvested, and used. This is truly found food, meaning that all the costs and impact have already been absorbed, yielding more from less. For modern consumers who demand better, food makers are always on the hunt for a nutrient-dense and sustainable edge. That focus has created a robust marketplace for specialty, functional, and other value-added ingredients. In other words, we help our partners create top-selling products supported by both health and environmental claims. As a mission-driven business, we first found a way to integrate our community back in 2018 with a record-setting crowd investment campaign, followed by strategic investment from a global brewery, a product development powerhouse, and a beloved food brand. When COVID-19 hit, we knew we had to respond with resilience. In doing so, we were returning to you, the people, to appeal for your continued participation in the most democratic form of capitalism known to humanity, one in which you can literally invest in the change you wish to see in the world. Together, we can disrupt the old ways and forge a new path to create a better, more resilient food system and make out financially well along the way. So let's do it. Let's better align the food we eat with the planet we love and move onward and upward together.
Daniel, amazing pitch. Love the music. Love the video. Made me feel all warm and fuzzy inside. Let's kick off this Q&A session. We'll start with you, Carolina. Any questions, feedback for Daniel?
Yeah, definitely. So we know that exposure to heat, water, right, sunlight, even oxygen causes degradation of vitamins, probiotics, and other active ingredients. Can you talk a little bit about how your upcycled brands kind of compare in terms of the nutritional value to non-upcycled brands? And are you fortifying them?
Yeah, that's a really great question. Thanks so much for bringing that up. So a little bit more insight into our process. What we're doing is, and I stumbled into this, by the way, as a home brewer. So I was just making my own beer every week and did some experiments with what I was left with after the process. And beer making essentially extracts the sugars from the grain. And so what it leaves behind is plant protein, dietary fiber, and a high percentage of that is actually prebiotic. So it's good food for the probiotics. The grain that we've picked up from these breweries, it's basically just been soaked in hot water. And then what our process does is it uses a low temperature stabilization to effectively, it's a fancy way of drying it out. And we have a patent on that. We developed it with the USDA, and it was designed to be extremely energy efficient and also gentle enough to preserve the nutrients, not burn the product, and make something that we can then mill into a powder, which can then be incorporated to fortify a wide variety of food applications. So if you go on our website, you can see products that we've brought to market. It's something that we've done to help build the market, and we have a shorter development cycle than some of these big companies that are multinationals that we're working with. But when they bring these products to market, yes, they're excited about the upcycled story and taking part in fighting food waste and taking action against climate change, but it's also a way to create nutritionally differentiated products. Most things that they're making will be lower in calories, higher in fiber. We can get to a good source of fiber claim with a relatively low inclusion of our ingredient, for example. So hopefully that's helpful. Happy to go into the weeds any further there.
Yeah, and I had another follow-up question around kind of food safety. Obviously, you're getting your ingredients right when they're in a way they would have been discarded otherwise. What are you kind of doing in order to make sure that by the time it gets to you, it's not contaminated?
Yeah, that's the key part of our IP. Actually, it's what we stumbled into as the main reason why there had been decades of nutritional science about how healthy this ingredient was that was coming out of the breweries, but why there hadn't been a successful commercial application before. It's very unstable because it's so high in moisture. It's very hydrated, and the moisture is actually very bound at a molecular level. So we actually have a 5-log kill step, in our process. It was really designed to be the gold standard of food safety for processing this ingredient. And with our model at scale, it'll actually be co-located at some of the sites of production too, which will reduce some transport time. So everything that we did, all of our work that we did in partnership with USDA under a co-research and development agreement was around figuring out exactly how to scale this process in a way that was economically efficient, with sufficient throughput and things like that, but also from a food safety perspective, making sure that this will work. And what's really exciting is brewer's grain actually is one of the most challenging of these byproducts to turn into food products because of its moisture content. But the process works really well for things like oats from oat milk and the like. So that's really one of the reasons why our invention was actually novel enough to get patented, and is really key to our whole ability to scale.
Great, thank you.
Yeah, by the way, I should mention that we like calling this upcycling. We built a whole movement around upcycling, but it's a new term for a very old idea, right? I mean, I think one of the best examples of an upcycled ingredient, it would be whey, which is whey protein we see in all kinds of products, right? It's a very valuable source of protein. It's actually made at the same time that you make cheese. It's a byproduct from cheese production. And now you've got such a robust marketplace for whey that you've got actually some whey producers where cheese is the byproduct, right? So what we're doing is taking a very deliberate, proactive approach to identifying all these different supplies of food that's not going to its best use, feeding people, and putting it through a process of kind of connecting those dots to food producers and ultimately the end customer.
Great, Don.
Yeah, Dan, what a presentation. It actually reminds me of another company that I recently looked at called Future Fields, right? And what they do is they're basically the AWS of protein production for synthetic bio companies. I think that's great, but I think what I see here is sort of you becoming this AWS of upgrain or regrain products.
Yeah, great upcycling, totally.
And so one thing I'm very curious about is, you mentioned B2B as well as B2C here. What is most valuable to you, and how do you target that end customer right now, whether that's B2B or B2C?
Yeah, B2B absolutely is the focus. The challenge for our business, and this might be true with Future Fields as well if they're doing B2B sales, is that in the food space, we're talking 2-3 year development cycles to go from concept to market. So you've got a really long tail at which you have to support through R&D and positioning, and there's all kinds of work that goes into actually bringing these products to market, and then they'll go from 0 to 7 figures after launch. They go really big, but it takes time, and so what we were able to do in the shorter term is bring products to market ourselves to help build consumer awareness so that it'll mean something when these products actually hit the shelves. The grain from breweries, the technical term for it is called spent grain, like as if it's been spent of its value. There's nothing there that's worthwhile, which is totally not true. It just has been drained of its sugars and can't be used to make more beer. And so we're building a movement around the consumer awareness to know that, hey, it's actually Regrained Super Grain Plus. It's a branded ingredient so that we can actually co-brand with these other businesses that are sourcing our products, so we're not just a commodity. And so the B2B is absolutely the longer term focus, but the B2C helps us kind of get there. And even just to illustrate it a little more from an impact perspective, I mean, we're a very mission driven business. We're B Corp, like Neighborhood Sun, and 1% for the Planet members. Like, we're doing this to build a successful, profitable business, but we're turning trash into money as well and solving an environmental problem. Food waste is one of the most impactful issues, as I said in the video there. If we were a $100 million brand today, selling consumer products at $100 million a year, we would work with the output of only a handful of breweries. Whereas if we can become a supply chain partner to some of the world's biggest food companies that are expert at developing food products, getting them to market, distributing them at scale, that's much more impact on closing this loop that is just brewer's grain alone is tens of billions of pounds.
And one last follow-up on that is, when do you see that flipping happening where over 50% of product is upcycled as opposed to primary?
I don't know that that's the goal, actually. I think the goal is to, for us at least, is to be in as many applications as we can, and certainly at as high of a percentage as we can. But to set a threshold, a product being 100% upcycled or 50% upcycled, it's not so much about that as it is making sure that it's going into making the right choice for the customer, the easy choice of creating the best tasting products that are also, functional and nutritional, that are also through their supply chain innovations, helping to solve this problem. So, and it depends on the supply chain. Like, our ingredient can be used depending on the application. If you're making a bread, for example, it might be 25%, 30% of the total flour. There's other upcycled ingredients, and that's because the gluten structure, we can get into that if you'd like. But there's other ingredients that are really exciting, like, for example, the coffee fruit. So this is the fruit that's around the bean. We drink basically the pit of the coffee, the bean that's roasted and ground, and that there's a whole fruit that's around that has a bunch of antioxidants and caffeine and functional properties, but it can only be used in like 5% of a formula for a lot of applications, right? So to push that, as high as possible, might create a product that the consumer will reject, which will kind of, I guess, make that the whole value proposition just fall apart. And so we're really focused on finding the best applications at the best percentage where we can deliver on that, that goal of creating great tasting products that are better for people. And oh, by the way, they're great for the planet too.
Thanks.
Thank you.
All right. And Eric, any questions, comments?
Yeah, maybe just let me ask a question a little differently. So Daniel, great presentation, by the way, and a couple questions that I was going to ask you were asked already. So let me ask you this, right? In terms of your business right now, at this stage, and then getting to on the B2B, growing the B2B side, what are the top 3 risks that you see to your business right now, and how are you addressing those?
Yeah, for sure. I mean, just the nature of the long sales cycle poses a lot of risks inherently with that, especially around cash flow, right? I mean, we're investing a lot in R&D and in developing these products. Today, there's not a viable alternative to our ingredient for these suppliers to then go take all that work that we've done with them and then just go sub us out for someone with like race to the bottom pricing. I think at some point in the future, as the big ingredient companies either try to do this themselves or, I don't know, potentially acquire us, right? I mean, that dynamic could come into play, but right now, one of the big risks is becoming a priority, for actually coming to market with these producers. Different companies have, different things that they're focused on. General Mills, for example, is very focused on soil health. We can make an argument that we tie into regenerative, food systems, but they might prioritize a project that is using like biodynamic wheat or something like that instead of upcycled barley. And so helping to shape things to make sure that we remain a priority in development, especially in a post-COVID world where some of these priorities around product development have shifted. Another thing is that we are scaling our processing right now to in our plant in Berkeley. It has great capacity. It's not the best place for a plant for food production, right? We're going to want to deploy these geographically, places like Chicago, the East Coast, internationally. And there's kind of a lot of lotto tickets, I guess, attached to how that model can be really successful. But there's also certainly a degree of uncertainty there. Will the co-located model, make the most sense? We know that we don't want to be in the machine selling business, but what kind of licensing agreements or joint ventures? There's a lot of that is, there's a lot of different ways that it could be successful, but each of those also have their downsides. And I can hear myself kind of going on and on. Here I don't know if I said 3 or 4 or 2 or 5, so maybe I'll pause there for any follow-ups. But there's just we have a lot of excitement about what we're building here, and maybe I'll say the last one would be focus, right? We've got a small team, we've got a lot that we're trying to accomplish, and it's really important to prioritize, building this this model in a way that's gonna work, right? But there's a lot of unknowns. We're pioneering this, and we could be pioneering it for someone else to come in with $50 million in funding to take all of our work and leave us in the dust. We certainly hope not. We think we're going to pull this off, but that's when you're pioneering something, that's always a risk.
Okay, well, if there aren't any other questions from the Q&A panelists, so there are questions in the audience. We are a bit over on time, so what I will do, Daniel, for you, is we will send these questions to you as a follow-up. The individual that asked the questions, we will send you the answers to that as well.
But one other thing to note is on Wefunder, of course, is the place that people can ask questions. And you'll note on our page that we've hit our goal actually as of yesterday. So we're at, but what we're able to do is move some of the people over that are accredited to a parallel raise that frees up space. So you're still able to make that investment, even though we're at our goal. So that's really important to note. Really exciting. We launched 3 weeks ago and we're already at 535K. So we're pumped, and we'd love to bring as many more champions in as we can.
Nice. Love it. That's so great. Well, Daniel, thank you so much for the pitch. It was fantastic. Love the product. And hope to see you, in store soon.
Thank you so much.
Take care. Cheers. All right, cool. Well, now to wrap things up, what we're going to do is just ask each of the panelists to give some feedback and advice to these founders one by one. And what we're going to do here is start with, whoever's next to me right now on the screen. Looks like Carolina. Then we'll go Don, and then Eric. So, Carolina, if you have any advice, feedback, anything for any of the founders that pitched here tonight, shoot.
Yeah, no, I mean, I'm in their shoes most of the time, so I know what it's like to be on the other side. And I would say for, as they're raising, to really kind of focus in on what they're doing. And I think a lot of them have really solid ideas that there'll definitely be bumps in the road, so hang in there. That'd be my advice.
Cool. I can go one at a time here. So for Fancy, I really love the story. I love the platform. I think talking about how you have a very robust platform that, can scale to tens of millions of users, and then also really focus on the creators and the people who really help curate these mission-driven brands. For Manna, really love this whole Tinder for recipes idea. I think one thing that you can really start thinking about is the graph that they're building. Certainly, I love that integration with Instacart, but I think there's definitely something more that you can keep pushing on. For Vyrill, really enjoyed your pitch. I think that what you really need to hone in on first, though, is how you are a analytics engine that just makes it really easy for brands to hone in on their customers. I really lost that when you mentioned unboxing videos, and I wasn't actually sure what your product was. Neighborhood Son, I think it's a great mission-driven mission. The first thing that came to mind for me, though, is how do I get venture returns on a B Corp that's really just trying to empower goodness? I think you really hone in on software that empowers other community solar projects. I think that could be a really big opportunity. And also then owning that graph of where you can move that energy on a national scale. And Regrained, love what you guys are doing. Certainly think that the B2B is the right way to go. Your website screams B2C though. And so really want to make sure you hone in on this, especially when you look for investors on this B2B model and how this is the future for any big brand like General Mills, like Kellogg, or anything else.
Yeah, for me, I think it's more of a general comment, right? It heard a few times, and I think this obviously a recurring theme for a lot of companies is the COVID-19 world, right? About what's happening right now. And obviously we're seeing trends in e-commerce is exploding and other industries as well. And on the flip side, some industries are dead at this point. But what I'm hearing sometimes is companies saying, hey, we're essentially attaching ourselves to the COVID-19 trend because we're seeing this happening in the market. What I'd like to hear too is what does the post-COVID-19 world look like, right? And not just taking advantage of the trend right now, but are you able to set yourself up for success, whatever that world might look like, that you think it's going to be? Like, for instance, e-commerce, right? The share of e-commerce right now has exploded from, depending on what chart you take a look at, from 18% to 27%, right? I think we'll end up somewhere in the middle, maybe 23, 24% share of total commerce. Question is, how are these companies preparing themselves for that post-COVID world? So just think about that as we're going through this over the next few months.
Okay, great. Well, thank you everybody for the feedback. Again, if anybody in the audience is interested in checking out these startup companies any further, please visit our partner site, wefunder.com. Again, fancy.com, Manna, Regrained, Vyrill, and Neighborhood Son. Amazing jobs pitching today. Wanted to extend a huge thank you to everybody that's on here right now watching for sticking around and joining us for our Startup Sommelier show. Huge thank you to Carolina, Don, Eric for joining us as panelists. You guys did an amazing job, asked amazing questions. And then finally, a huge thank you to the equity crowdfunding platform Wefunder. They're great, awesome people, awesome company, awesome values. And just thank you again for partnering with us on this event. Everybody out there that's still here, keep an eye out on your inbox for a startup lookbook where you'll get to see an overview of each startup that pitched. And in the spirit of paying it forward, we'd love for you to walk away with making a connection from one of these startups, an introduction or a follow-up, or at least, checking out their sites on Wefunder for one of these great entrepreneurs. But have a great rest of your night and see you next time where we're going to have another 5 amazing companies and 3 amazing panelists join us in the hut. Take care. Have a good night, everybody.